Hey everyone, how's it going? My name is Richard Moglen and welcome back to another Stock Market Outlook video sponsored by MarketSmith. It's really been a tale of two different markets because we've got the NASDAQ, S&P 500, IWM in severe downtrends. But if we bring up the XLE as well as material indexes, that type of thing, you can really see the divergence here. These are in strong uptrends above rising moving averages and making new all-time highs, as bullish as you can get. But of course, the general in the market, a lot of growth stocks in particular, are still faring very, very poorly. So let's go over to the NASDAQ here. And as always in this video, we'll talk about the major indexes, leading stocks. Then we'll talk about sentiment from a few different sources, the IBD Big Picture article, and finally the Wishing Wealth GMI Signal. And at the very end, I'll put all those different sources of information together and give you my take on the overall market. And if you do enjoy my analysis and find these videos helpful, please go ahead right now and leave me a like down below. It just takes a few seconds and helps me out immensely. And of course, subscribe if you want to see more videos just like this one every single week. All right, so let's dive right in and start with the NASDAQ 100. Obviously, we're in a downtrend below the declining 21 EMA as well as the 50 SMA. The 200 SMA is starting to tail down now. And overall, we're still very choppy, very volatile. It seems like we're up 1%, down 1% the next day. And it's been tough to manage risk in leading growth names. However, we're still holding above this low. And I think this is definitely a key level to watch. And I also like to look over to the left-hand side and see what kind of potential areas of support are over there as well. And I'd love to see kind of one big capitulation day, gap down, down 3%, and then a hammer candle. I think that could be the start of a new potential rally. But right now we're not seeing that. We're just kind of seeing chop and a slow drift downwards. I'd love to see kind of an acceleration to the downside, one more wave down. I think that could put in a potential bottom. But I think what's really important is to just take it one day at a time and wait for the market to really prove itself before you really step on the gas, at least with the tech names. Moving on over to the S&P 500, let's take a look at that index as well. Maybe a little bit stronger than the NASDAQ 100, but still below a decline 21 and 50 SMA. The 50 SMA is close to crossing below the 200 SMA. That's the death cross. I personally don't care too much about a death cross. I think the market changed character back in this area as we lost the 21 EMA. But it's just a sign that there's a lot of chop and we are in a correction. So looks like the S&P 500 fared a little bit better into the end of the week, but once again, this is a key level to watch as well as a low of last week on this index. Moving on over to the IWM, the Russell 2000 index. This is also pretty choppy, a little bit stronger than the kind of other two main indexes recently. You've got this line to be aware of as well as a low of last week. That will be a critical level. But once again, we're below a declining 21 and 50 SMA, and this 21 EMA, it continues to be a resistance level. So I'd love to see us build above that moving average, get back above 200, start to form some higher lows, higher highs, and get back above this 209.05 level, which is also pretty much the low of this prior base. And this has been a really significant level pretty much for the entirety of the past 12 months. Bringing up the IWO, which is Russell 2000 Growth Index, you can see this is maybe a little bit weaker than the Russell 2000 in general. Negative downside reversal on this Friday. Couldn't retake that 21 EMA. And once again, I want to see us get back above the 21 EMA, the 50 SMA, the 200 SMA, and start seeing those kind of curl up under price. That could be the start of a new potential uptrend. And that's what I'm hoping to see from not only the indexes, but also leading groups as well. Moving on over to the FFTY. This is also another index to take a look at. Once again, below the lows of pretty much the entire base that took basically 12 months. We're below a declining 21, 50 SMA, 200 SMA is sloping down. So we are in a stage 4 downtrend as of this moment. And what remains to be seen is this consolidation kind of the start of a bottoming process, or if you turn it kind of upside down, is about a break out to the downside. And no one knows what actually will happen. We'll just kind of have to wait and see, but you should have a plan regardless if we break to the upside or the downside. And just because we're in a chop corrective phase doesn't mean you should stop doing your homework. In fact, this is the most important time to note stocks, building out those right-hand sides, note which groups as a whole are shaping up. That will pay off immensely if we do start a new uptrend. You'll be right on top of things and have that list ready to position in once we start a new uptrend. So keep doing that homework. If you're a position trader, you can do it at the end of the day. If you're a swing trader, you can be a little bit more involved. But the point is you don't want to kind of lose focused and kind of scale back your attention completely, because you want to know kind of what's going on and note when the conditions change and improve for the better. And moving on, let's talk about a few different growth names, starting with Tesla here. Obviously, it's not above the rising moving averages, so it's not in a strong uptrend right now, but it's kind of battling with this 200-day moving average area and the 800 area. And I think it'd be good for growth stocks in general to see this kind of find some support and start a move up the right-hand side of the base. This low right here is pretty relevant, and this was right at pretty much 700. And I'd love to see it get back above that 200 SMA, get back above the 21 EMA, and start move up towards 1,000. But right now, it's just not ready as of this moment, but we'll have to see whether it can break above this kind of pivot right here, as well as this one right here. Moving on to Google, this is kind of just chopping sideways, forming a basing pattern, holding these lows for the time being. I don't like how it's sold off after earnings, but compared to Facebook, Netflix, this is faring pretty well. Overall below, declining 21 and 50 SMA, as well as the 200 SMA. So I definitely want to see it kind of push up here and take out this level and start push back towards 3,000. Next up, we've got Facebook. Obviously, this had the large gap down and it's pretty much drifted lower ever since, lost 200 now. And this is just a no touch for me. This type of action indicates to me that net institutions are selling. There's a huge volume coming out of this stock here. So definitely a no touch for me. And just looking at the weekly, this looks pretty darn bad. Look at all that volume coming out on the week. Moving on, we've got NVIDIA, which is one of the liquid leaners in the chip space. Going back to that daily chart, it's lost the 200-day moving average, below declining 21 and 50 SMA, so it does not look good here. And you've got these pivots to the downside if you're looking for a short, as well as most likely this would be a better pivot, better risk reward right here on Thursday. If it breaks that and falls through to the downside on this Friday. Overall, to the long side, I'd love to see this kind of shape up, retake that 200 SMA, get back above that 2150, and start to move up and take out this 269 area, but definitely negative action here in distribution. You see a lot of downside reversals, losing the moving averages, and a changing character compared to the nice kind of clean action from these bases back here. Moving on, I also like to look at AMD. This is another former leader in the chip space. This looks worse than NVIDIA, lost the 200 SMA, below decline 21 and 50 SMA, and very choppy back in here. And you can see right here, it traded really cleanly and tightly and had a lot more constructive price and volume action. Then it got wide and loose and then lost some moving averages and really started to see some distribution come in. And moving on to some names that are actually acting well. XLE, this entire sector is acting really nicely. We've got COP off the top of my head, ExxonMobil, Oxy. All these names are in strong uptrends and seeing a lot of accumulation here. So unfortunately, we do have a lot of volume and not much price progress. So I'd love to see kind of some consolidation sideways, see that volume tighten up as well as price. And then we could be set for another move higher, but a little bit short-term extended above the moving averages for my taste right here. We've also got some other names in there. Venom acting really well, just holding that 21 EMA, a little bit choppy, but still in a nice uptrend compared to the S&P 500. Moving on, some recent IPOs that I'm watching. Bros acting okay, pretty choppy in here, but was looking really good on Thursday, but then Friday was definitely negative, taking out that low, closing above it, but just barely, and losing that 50 SMA and 50 level once again. So I like where the stock is in with its overall life cycle, but still has a lot of work to do before it would be ready and tight enough for me to look for a position as of this moment. Moving on, we've got SG, definitely stood out last week. Super strong action, taking out that kind of 30 level, as well as that 32, 33 level. As the overall market was pulling back hard, this was one of the only green names in my watch list, basically, along with all the other energy material names, and is acting pretty well. You do have a little bit of hesitation, some selling on this Friday, so I wouldn't be surprised because it is so short-term extended to see some consolidation days, but this is definitely one to have on your radar. USER is another name in a similar spot in its life cycle. Unfortunately, very negative action on this Friday, but still worth keeping an eye on. It did lose that 21 EMA and the bottom of this prior range. Moving on, we've got SLCA, US Silica Holdings, acting super strong above the 21 EMA, a little bit short-term extended, but nice breakout here and then a retest earlier last week. And overall, you can see a nice breakout from a longer-term base here above 15. Moving on, we've got some shippers, Zim as well as GSL. Nice trends here. Zim has a pretty ridiculous dividend as well. I think $17 a share. So that's definitely contributing to its price action, but very strong action breaking into new all-time highs on both those names. AMR is a stock that's been acting well, super strong trend here above the 21 EMA. I had this on my radar and watch list here. I did have a trade in it. I made a little bit, but I definitely didn't hold it and take advantage of this entire move. Look at that relative strength line. This is really, really strong, but definitely very, very, very short-term extended. So unless you're a day trader and are very experienced, I wouldn't be looking for an entry point up here. You've also got very high volume as it is very, very extended. Moving on, we've got Alcoa AA, and it did have a big downside reversal on this day, but is holding the 21 EMA, so maybe we get some basing action, but this is once again in a very strong uptrend, holding that 50 SMA along with that 21 EMA for the time being. So that's Alcoa. Moving on, we've got TAN. The overall solar sector had some strength last week. Negative action towards the end of the week, but definitely some strong pushes through pivots here. Downside reversal on this Friday, as you can see. ENPH in this group is pretty strong, starting to move up the right-hand side. SEDG as well. Those are some go-to names. SEDG looks a little bit better, but definitely a little bit choppy, but you've got to pivot right at this level. Moving on, we've got CF. You can see this is in a leading group as of this moment. Very strong action, trending above the rising 21 and 50 SMA. We've also got TECK, Tech, acting super strong in the mining group. This is also a leading group. And we've also got CRDO, a recent IPO, definitely worth watching. A little bit choppy here, but holding up very well, holding that 21 EMA, which is definitely a lot stronger than the overall market. This is definitely a little bit more of a speculative play here. And lastly, I want to go through a few former leaders which are not acting great. UPST showing distribution, even though it did have a gap up on the highest volume ever. It lost that level and is now back near 100. We'll see if we can form out a base here, but this is in a substantial decline here. SQ, another name that's just in a downtrend. A lot of these former leaders are going to need a lot of time to reset things, reset their base count, and start another stage 2 uptrend. So don't fall in love with these names. Look for new leadership in tech if that starts to shape up, and in overall leading groups once we do get that new uptrend. And moving on to a few different sources of sentiment, let's start with my Twitter surveys, and we saw a slight decline from 24.2% to only 22.4% bullish, which is definitely on the low end, but I have seen lower back in the 2020 correction. So just because sentiment is poor and everything seems like the end of the world, there's a war going on, doesn't mean the market can't bottom. So remember, the price action of leading stocks and the market indexes is much more important than sentiment. These are all secondary indicators, but it definitely is good to see some fear finally in the market. Moving on to the name exposure index, we're actually increasing as of this moment, but still relatively low at 42. Looking at the put-call ratio, still just kind of in this range here. I'd love to see a spike up to 1.15. And finally, the bulls versus bears poll, we have gotten that cross finally, and I'd love to see the bears really pop up to 40 and even higher. That would be a good thing to see. Definitely confirm that there's a lot of fear in the market. Moving on to the IBD Big Picture article, the headline is "Stock Market Falls as Biden Targets Putin, but consider this, these groups show steel." I like the pun here because steel stocks have been doing quite well. Overall, they talk about the price action of the market indexes, a little bit about what Biden is doing to kind of counteract Putin with when it comes to sanctions and oil and all of that. And they do highlight some leading stocks and some leading groups right here. Power infrastructure, Deere, and overall their current outlook is still a market in correction. Lastly, we've got the wishing well GMI signal, which is still red since January 10th, and the GMI score on Thursday was only a 1 out of 6. So overall, my current view is a market in correction. I love to see a big capitulation day to really kind of spike some fear here and potentially put in a bottom, and then from that point, I'd love to see some higher lows. Overall, groups start to outperform and move out the right-hand sides and break out of sound bases. Keep in mind, it's still very volatile out there. We can get some dramatic moves in just a few days because of short covering. So keep that in mind. Even if you are trading, it's tough to short here. And overall, I hope you guys enjoyed this video. If you did, please go ahead and leave a like down below and subscribe if you're new to the channel. And let me know your thoughts on this market down below in the comment section. And with that, thanks so much for watching. And I'll see you guys in future videos. Thanks.